Imagine planting a small seed today, and in a few years, it grows into a massive tree that provides shade, fruit, and shelter. That's exactly what investing in the stock market can do for people's money if you know how to do it right. Hi, I'm Sam from Empower Capital, and today we're diving into the beginner's ultimate guide to the stock market. If you've ever felt like the stock market is just for Wall Street pros or people in expensive suits, think again. You can start building wealth today, even if you're just starting out with just $50. Alright, so in this video, we are going to talk about how the stock market actually works. We're going to talk about the safest way to get started. We're going to discuss the top beginners mistake to avoid and step-by-step plan to go from zero to being a confident investor. Once again, I repeat, this is not legal, financial, or tax advice. Make sure to do your own research. This video is for educational purposes only. Make sure to like, share, subscribe, and comment if you have any questions. What is the stock market? Number one, think of the stock market as a giant marketplace where people buy and sell small pieces of companies called shares or stocks. Owning a stock means you own a slice of that company. If it grows and profits, your slice also becomes valuable. So the main US markets are the New York Stock Exchange and the NASDAQ. And I know other countries have their own as well. London has their own, Toronto has their own, and all around the world and so on. So stocks are ownership, not just numbers on a screen. Okay, so that's the basic stuff that I mentioned right here. Number two, why invest or why consider the stock market? One, it beats inflation. If you leave your money in a savings account, it loses value over time. Stocks can outpace inflation because inflation erodes your money. Because if inflation rate, let's say 3%, and or 4% or whatever, if you're not making at least above that hurdle rate, you're losing money. Number two, wealth building. Over the last 100 years, the stock market has averaged over about 10 to 12% annual return. So that's also another reason. Compound growth, gains earn gains. It's a snowball effect. So the bigger your principal gets, the bigger the gain can also be. So if you invest $100 a month with an 8% average return, you could have about DK in 20 years, right? It's better than just leaving it at that amount, right? Because it's gonna take you twice the amount of time to double your money. Whereas this thing can be working for you rather than you having to work another 20 years to double your money, right? So yeah. So how does the market really work? Price fluctuations driven by supply and demand, company performance, like their financials, economic news, and investor emotion, sentiment, and all those things. And I remember I did a video about how the market works, and so on. Bull versus bear market. Bulls go up, bears go down. So look for that video I did about still don't believe in stock market and Bitcoin. Short term versus long term, and the short run, and the market is a voting machine in the short run. It's about popularity. In the long run is a weighing machine because it's about value. Number four is types of investment for beginners, right? So individual stocks, buying shares of specific companies. Let's talk about the ETFs, right? What are ETFs? So ETF stands for Exchange Traded Funds. It's a basket of stocks, and it's safer for beginners because it's sort of mitigating the risk, right? When you're diversifying there. Index funds as well, right? Tracks the market like the S&P. Low cost, broad exposure. So if one side is industries doing well, another side may not be doing well, it balances out. Dividend stocks pays you part of profits regularly. Passive income. So dividend stocks are paying you dividends on those stocks. Some beginners often start with index funds, ETFs, and to spread their risk. So those are pretty good for beginners. Next, how to really start investing like step by step. You set your goal. Are you investing for retirement? Are you investing for income, or or a big purchase, right? You got to determine all those things, right? And then choose the brokerage. And the brokerage such as Fidelity, Vanguard, Charles Schwab, E-Trade, Robinhood, and so on. Once you find the brokerage that you want, then you open an account. Could be a regular taxable account or IRA, which is a investment retirement account. You can open one of those type of accounts, and then you fund the account. You can start as small as $50. And then you go in there and pick your investments. Consider ETFs or index funds at first because they're lower risk and it's very diversified, right? Risk and reward go hand in hand. So automatic contributions, right? So you set it up and it keeps automatically contributing through your job or through your bank account. So what are some of the biggest mistakes beginners make? They chasing hot stocks just because it's trending doesn't mean it's smart. Remember, you should understand whatever you invest in. That's a principle by Warren Buffett. That's one of his 20 principles. Not diversifying all the money into one company equals big risk, especially if you're new, especially if you don't know what you're doing, right? So timing the market also can be tough. You can't time the market in the short run because there's so much volatility. So over time is the best way to go. Panic selling, the market drops as normal and people sell out of fear. So those are all things why it's important to gain understanding. So when the market drops on you, you're not panic selling. Success principles, right? In the long term, right? You start early. Time is your biggest advantage, right? The more time, the better. So if you look over time, 10 years time, most people are profitable that held on for a 10-year period, right? So stay consistent, invest in monthly, no matter what happens in the news, right? Once you have quality stocks, if you hold on for a long term, usually you will come out profitable, right? So you keep learning, follow credible sources, read books, follow channels like Empower Capital, follow good people on Twitter or X. Think like an owner. You're buying businesses, not lottery tickets. Okay, so stocks are not like lottery tickets. Think about it as a business because if you approach it like gambling, then it's probability, right? It's just a chance, right? But people like Warren Buffett were very successful in the markets because they were not gambling. Okay, so just to recap, is investing isn't about getting rich overnight. It's about building steady wealth over time by having some ownership into these businesses. All right, start small, stay consistent, and let your money work for you. If you found this video helpful, make sure to hit that like button, subscribe, and for more beginners finance tip, and share this with someone. And let me know in the comments what the first stock or ETF you're thinking about buying. Remember, my journey was just like that, right? I didn't know much at all either, but I began to follow the right people on X. I had already had a basic knowledge. I already had a basic understanding. Yes, I had my MBA. Yes, I had my bachelor's degree in business and all that stuff, but that still wasn't enough. And so I had to actually go out and search and do my own research and follow the right people on YouTube, on X. Um, and through following the right people, you just get to learn so many things. You start to ask pertinent questions. By asking these pertinent questions, it leads you to more questions, right? That's called intellectual curiosity. You keep asking good questions, right? Ask and ye shall receive, right? Ask, seek, knock. They that ask shall receive, they that seek shall find, they that knock, the door shall be open. So you got to keep asking, you got to keep seeking, you got to keep knocking. That's a biblical scripture, right? And it's true. So you got to ask the right questions and try to figure out. Now you have AI at the tip of your finger. You can find information very quickly. You have Grok embedded in X. So there's so many information on X. If you find the right people, you follow them, and you can get Grok to sort of verify some of the information you're reading, whether it's true or false, whether it's verified or non-verified, because a lot of the news stations, a lot of the news articles, a lot of the especially business news articles, if you go read them, they're referring back to X. That's the funny part, right? I read NASDAQ sometimes, I read Bloomberg News sometimes, I read all these news articles sometimes, and then they were referring back to X as the primary source data. So what's the point of me even reading the Bloomberg one, right? Because some of the top Bloomberg intelligence, such as Eric Balchunas, for example, they're all on X. I just follow them, right? And so these are ways to do research, right? So I'm actually going to do another video. If you want me to do another video on how I research my stocks, how I research my Bitcoin, how I research my investments, right? So I can do another video if you're interested. Make sure to let me know in the comment if you're interested in me creating a video on how to effectively research on investments that you want to invest in, right? So that's what I can do for you guys, but it's a journey, right? And so once you're done there, you go into Fidelity. I actually helped my one of my cousins go to Fidelity, and literally you go on the website fidelity.com, and I told her to open an account, and she opened an account, and then it was very easy. Once she opened it, she went in, funded the account, right? So from Fidelity.com, she went in and funded the account. It took about 2 days that the money showed up in the account, and that's how she was able to invest and buy her first stock. So it's that simple. All right, so I want to show you what it looks like to open an account, such as Fidelity. You see, I go here to the Fidelity website, and I go ahead and if I want a product, let's say I want NASDAQ, all right? This is the NASDAQ ETF for the NASDAQ index fund, all right, which has all the top 100 NASDAQ companies, which are tech companies and so on and so on, or S&Ps, right? Well, let's see what that comes up. I put S&P, right? This is the ETF right here for the S&P 500, Standard & Poor's 500 ETF Trust. I can go ahead once I'm logged in and I've created an account, I can go ahead and actually begin purchasing, right, assets in there. Right now, it's not logged in, so it's hard to actually make a purchase. So once you're logged in, and you can just literally type in the asset or the asset's ticker name. For example, Google, for example, would be GOOGL. Obviously, if I type Google, it's still going to come up right here, Alphabet Class A. So if I click that, it'll bring me to the buy side right here. All right, and it's that simple. Literally, I can buy or sell. If I want to buy, I buy. I click buy. Once you go into open an account, and you go ahead, click open an account, and then it's going to give you options. All right, you already, let's just say no. All right, it takes a few minutes, and you're done, literally, and then you can fund the account with funds from your bank. So you go there, you can start with as little as you want. It can just be for me, I'll share it, whatever, if it's joint or just individual ownership. And they're gonna give you all different kind of accounts. You're gonna fill it out and go through the whole process. All right, so that's here once again, just the open account button right here. And if you have questions, you're not sure, you can always ask ChatGPT as well. It can direct you as well. So once you go to the open account section here, usually it would ask you what kind of account you want to open. So a retirement account, IRA, safe for retirement with access to broad range of investments, exceptional services, and free guidance and so on. All right, so these are things that you're not really allowed to touch after you input, right? If it's a traditional IRA versus Roth IRA, right, you're going to get hit with tax, but you can borrow against it and all those rules that are there. Roth, you can touch the principal. Traditional, you can't. So there's all those implications that you can go look for my video, Roth versus traditional IRA video I have in the tax playlist of Empower Capital channel. So you can go check that out and see a little bit about whether Roth versus IRA, which one may be better for your situation. Planning and advice. Start making real progress on financial goals. Help from investment management services. That's nothing really, just for planning and stuff. Brokerage, this is one that if you want to be trading and as well, if you want to go in and out, buying things, selling them without any issues and withdrawing, that's brokerage account. Right here, you can do the same thing as well. You can buy and sell in IRAs, but you just can't withdraw easily. That's the difference. Some of the main differences. There's a lot of tax benefits of the IRA and retirement accounts. Obviously, this is also limited with the amount you can put in per year. Here, it's not. So that's also good to know. HSA for health savings account It's similar to the retirement. It's for health savings. So for retirement. So it's a vehicle that the government has set up so you can learn to save for your medical expenses, but you can also get tax advantages there. Cash management account, our alternative to traditional banking, offers more competitive rates on your cash, no account fees or minimum, blah, blah, blah. Okay. And then 529 plans is similar to HSA and the retirement account. It's also a tax advantage account where you can save for college, tax free, as long as you spend money one day on tuition, rent, food, books relating to school. All right, so these are all the type of accounts you can open. For the sake of those that are looking for buying stocks and trading, I mean, I don't advise trading because trading is very difficult. It is very complex. It is very risky. And so I'm a buy and hold type of guy, trying to hold during the whole bull market. And if I want to get out, probably at the end of the bull market. So knowing when the bull market is in session is very important. I made it on my last week's video, I believe, covers that. So go look for that, knowing when we're in a bull market. So you see there's so many different kind of accounts, and for starters, maybe the brokerage may be good. All right, invest as little as $1 and get a feel. Right, you can get all different kinds. You see here, they have all different kind of investments and ETFs, options, and so on. So following Power Capital to really understand the differences between some of these stocks, bonds, ETFs, options, and mutual funds, and so on and so on. So, but yeah, that's really how it is to get started on buying your first stock. Once again, once you're logged in, you look for the stock that you want, right? And usually it will pop up. All right, so I don't know where this one is. There it is. I'm looking for the stock right here, and you can see it right there. And then I can go ahead and buy, sell. All right, buy is to enter in. Once I want to get out, I sell. All right, there are charts involved in this process, right? So I'm also going to do sessions on charts and technical analysis. Right, I think technical analysis is very important to understand. Right, so here's like an account, a demo account that I created. You can go into Webull.com and play around with demo accounts. Okay, so this way you can get a feel before you actually use real funds. So this is a good place to learn and even learn about technical analysis. You can go in here and learn about all those things, right? So if I go here now, I can look at these charts, the candlestick charts, and look at what's going on in the markets based on these. Each of these represents a candlestick, but we're going to do different sessions on that, a series on technical analysis. So make sure to subscribe and stay tuned so you can learn all these things that people may charge you thousands of dollars for this kind of knowledge. I'm going to give it to you for free. All right. Anyways, make sure to like, share, subscribe, and stay blessed. Remember, God loves you and we love you. Take care.
Disclaimer: this video is for informational purposes only and does not constitute financial advice. Always do your own research before making investment decisions.